Hi, everybody. This is Tim from TradingStrategyGuides.com. I hope everyone is doing well today. It's morning here in the central part of the U.S., North Texas to be exact. So, good morning. Hope everybody's got some coffee. Good morning, Chris, Siva, Tony, Shokrola. I apologize if I'm mangling your names. I don't mean to do that. Today, we're going to look at a great and simple swing trading strategy using Bollinger Bands. But first, I want to make sure everybody can hear me and see this title slide. Let me know. Can you hear me? You can just say yes or yes, I can hear you or whatever. I want to take this opportunity to apologize for last week's technical issues. Apparently, I was using a marginal USB cable in my microphone. Hopefully that issue is resolved. Cool, Tony. Thanks. Thanks, Chris. Yeah, I have a VU meter jumping here this morning. So, Frank, Michael, Bernadette, good morning. If you're watching the recording of this live webinar, you can speed it up by clicking on the gear icon below, selecting a faster speed. And if you're watching live, you get to ask questions. So that's your trade-off right there. Siva, I'm going to show you a great swing trading strategy. The best strategy, now this is going to sound like I'm, like blowing your question off, and I really am not doing that. But the best strategy for you is the best strategy for you. And I suggest that you try a bunch of them. And that's one of the things about trading strategy guides that I love, is that they have all these great strategies you can try out and find the one that fits you best, fits your style. If you've been around here for a little while, you've heard me say that, I have certain needs, and one of them is to not have to stare at charts all day long. So a strategy that doesn't require me to sit and watch the chart intensely for moves and that sort of thing works great for me. But I have a friend who can sit and stare at the charts all day long and make a bunch of money doing it. And I wish I could do that, but I can't. I have to do what works for me. So I'm going to show you a great swing trading strategy today. I've showed you others. Check out the videos on this channel. There are lots of good swing trading strategies. There's lots of good strategies that work for both swing trading and day trading. So, Michael, Cyborg Ty, Tony, Frank. All right, you guys. Stay around to the end and we'll look at a trading maxim from the archives from one of my favorite authors. Also, don't forget to click the subscribe button, click the bell for notifications. And let's look at some of our open trades right now. This is Boston Beer. I moved the stop up to 382.75 right here to get it just below these bars right here. Thankfully, this thing didn't pull down too much. I actually moved this stop up here after this bar formed. So hopefully that's just kind of a pause bar and we're going to keep going up. But if we don't, 21.27 on the second half is not too shabby. I'd be very happy with that. Okay, the next one is Tesla. Tesla keeps pushing up. Look at this, today's bar. This is so nice. So nice. Move the stop up to 243 to lock in 1583 on this one. This is also nice. That means we've already doubled our second half from our first half, just like we did on Sam, on Boston Beer. So these two trades have been really good. Disney, we're still waiting for Disney to hit the stop. I'm not going to give this too much time before I shut this down. The whole concept behind this strategy is that it's based on this explosive momentum out of the consolidation. And it looks like the momentum may have been spent right here on this bar. Let me get my drawing tool here. May have been spent on this bar right here. And then it pulled all the way back. And now it's just going sideways. I may give it another day to explode and hit our first target. But if not, I'm going to just close it because I'd rather time my money up in something that's actually moving. So Litecoin, wow, you know, these cryptos have been really good. Currently, I got my stop down at 94.50 on this Litecoin short, locking in 1378. If I'll leave it right there until we get a lower low, probably. Now, if it starts to consolidate sideways, I'll get it just above the consolidation. Anytime we start seeing a consolidation in an open trade, you know, consolidations can typically break in either direction. So we want to make sure that our stops are tight so that we don't lose a lot if it breaks against us. But this has been nice right here. And the last one is Canopy Growth Corp, the marijuana people. You know, when I've kind of been a goody two shoes guy all my life. I don't admit that to a lot of people, but I've never done drugs or anything. And so to think about investing in marijuana, I don't have really anything against marijuana except that it's illegal in a lot of places here. And so to think about investing in medical marijuana and that sort of thing was kind of weird to me at first. But you know, it's a great opportunity right now. And this I still have my stop locked in at 37.75, which locks in a little bit, not a lot. But remember, we've already got half off of this one. So, you know, this has been pretty good. We got half off of all of these except Disney. Okay, just be careful because volumes are typically low in July and sometimes they're low in August as well. Hopefully we'll see volumes start to pick up in September, maybe the first or second week in September. Okay, well, let's take a look at the Bollinger Bands. Bollinger Bands indicator, I don't know too many people who haven't seen them before. Consists of three lines. The center line right here is a simple moving average. And the outer two lines by default are two standard deviations of the price movement above and below the center line. Now, once again, for you mathy nerds out there, this is how the Bollinger Bands are calculated. This may look confusing to someone who's not a mathy nerd, and that's okay. You don't have to know this to be a good trader. You don't have to know this to use the Bollinger Bands. The only reason I even put this up here is because mathy nerds like me want to know these sorts of things. I can't help myself. What can I say? The center line is typically a 20-period moving average by default. The upper line is two standard deviations of the typical price for the last 20 periods above the center simple moving average. So what we do is we calculate the standard deviation of the price for the last 20 periods, and it uses the typical prices, the high plus the low plus the close divided by 3. So it's kind of giving you an average that's of the range, but it's weighted by the close. So if you've got a big range but the close is close to the bottom, then your typical price is going to be lower, and so on. So this is kind of nice. A standard deviation is simply a statistical calculation that's a little bit complex. And like I say, you don't need to know this stuff. But basically, what this indicator is showing you is what you would call price volatility. Just like my favorite ATR indicator that you see me use in just about every video, the more volatile the price, the wider the bands are, and the less volatile the price, or the smaller the candles, the closer the bands are. Okay. Now, statistically speaking, 90% of the price action should be within the 2 bands. Okay. Like I say, you don't really need to know any of this to use Bollinger Bands, and I'm going to show you why. So let's get into this strategy. We'll be using 4-hour charts for this strategy. This will probably work on just about any time frame. I would probably use daily charts to do this strat, but mainly because I don't want to look at charts at all hours of the day or night to catch 4-hour bars. But if you like that, or if you like hourly bars, that works too. We're going to look at a sell signal first, and then we'll talk about buy signals. But they're just the same, just in opposite directions. So first thing you want to do is find a spot where the price touches the upper Bollinger Band. Okay, so the price has touched the upper Bollinger Band right here on this candle, and it keeps touching it right up to here, and that's what you're looking for. Anytime the price touches the upper Bollinger Band, it applies here, it applies here, it applies here. Okay. Step 2, we're going to look for a place where there's a breakout below the center band, the center moving average right here. So first price touches the top and then pushes through the bottom. Doesn't really apply here. Doesn't actually apply until right here. This one is kind of wimpy, and I'll show you why this one is not a good plan, and same with this one right here. This is a perfect setup. You won't always see a perfect setup, of course, but you probably can expect it to be a much higher probability setup if you see step 3, and that is this needs to be a big, bold candle, wide candle, as we say. Even though it's not wide side to side, we still call this a wide candle because it's long, and it closes near the bottom of the range. Those are the important things. This candle needs to be big and close near the bottom of the range for this to be a good sell signal. That's the reason why this one doesn't apply, this one doesn't apply, and this one doesn't apply. Okay? So a big candle like this signals bearish momentum. We're looking for bearish momentum entering the market. Okay? When you see that, sell at the bottom of the candle. Sell at the close of the candle is what I meant to say. So you only really need to look at these things once you see it touch the upper band. Check at the end of every 4-hour candle for a close down below the middle. Next step, once you're entered the trade, put your stop loss a few pips above the breakout candle, maybe 5 to 10 pips. You want a little bit of a fudge factor, as I say, in case price pushes up. But if you think about this, you're looking for downward momentum. You're looking for a lot of momentum, and that's what this candle represents here. So if price pushes down like this and then is up here again, then you know that this momentum is gone. In fact, I would be tempted to close this if I got any candle close above this middle. But hard stop loss up here will protect you in case you're not paying attention when price pushes up. Most trading platforms will allow you to use alerts whenever a line is crossed. So, I would definitely set an alert so I would know when price pushed back above the center band. Next step on this one is take your profit when price breaks above the center band, okay? So in any case, no matter where it is, I would close the trade if it got back above this band. That's just me. I like getting out of things way before my... Oh, Chris, I'm sorry. Okay. I don't know if I can make my cursor any more prominent, but I can draw. So basically, we're looking for a big candle. The close is down here. That represents momentum. If price gets back up above the band here, I would close it. I'm always looking for a place where I can get out of my trades early with an early exit signal instead of taking a full loss every single time. Okay. Yes, you may lose on a trade that pushes back up above the band and closes and then pushes back below. These things happen. Nobody ever knows where the market is going at any moment. I don't care what anybody tells you. No one can predict the market from minute to minute. So if price closes above and then pushes back down, so you missed that one. But you did get out without taking a full loss, and that's always good. One thing I've learned is that we not only win by winning a trade, we win by not losing trades. So if you make $1,000 on a couple of trades and then you lose 800 of it on losing trades, then you've only made $200. It doesn't matter if you were up $1,000 at one point. You were only up $200 after that. So if you can get up $1,000 or $900, but only lose 400 of it, then you're up $500 in the end instead of just 200. So you've won by not losing. I hope that makes sense. Okay. Now, you guys also know that I'm always in favor of getting a little profit off at a specific point. Now, I'm not just saying, oh, this looks good, I've got some profit, I'm going to take it. It's up 5 pips, so I'm going to take profit here. No, I'm not saying that. If you watch my trade management video, which I'll link below this video, you'll see that I like to target one ATR, one average true range. So whatever the breakout candle is, I look at the ATR, and my target will be that many ticks or pips or dollars or whatever I happen to be trading. I will take profit at that location. I will typically take half of my trade off, and then I'll move my stop to break even on the remainder of the trade. The purpose of that is to get a little profit and make the trade free from that point on. And then I will follow stops behind the price. As the price moves down, I'll move the stop usually a couple of bars behind it. And I trade daily bars. So the daily bar, a break above A daily bar in a downtrend is a fairly significant event. So if I keep the stop loss a couple of bars back behind the day bar, a couple of days back, that usually keeps me in a good spot in case price reverses. But then I also like to look at some indicator for an exit that will get me out before it hits my stop loss. And this is a good example right here. A break above this center line on the Bollinger is a good exit indicator. So what I would do is look for 1 ATR, take profit at 1 ATR, wherever that happens to be. It could be up here. And then set my stop to break even, and then follow my stops as it moves on. And I find that I win a lot of trades that way. I don't always win a huge amount, but I also stop losing a lot of trades because I get a little profit, and then if price goes back, I'm not hurt. I'm the rest of the trades at break even. And of course, as I mentioned, this is an example of a sell trade. This is an example of a buy trade. Look for price touching the Bollinger Band. You can see the band's really narrow right here. Price touching the bottom Bollinger Band. Then a big wide candle pushing through the center band. And it doesn't have to be immediately after touching the candle. It can be several bars afterwards. Buy right here, and then take profit when it pulls back to the center. And that's the Bollinger Band swing trading strategy. Like I say, if the 4-hour chart doesn't work for you, you could do this on a daily chart. I like daily charts because I don't have to, I only look at my charts once a day. Actually, I like to look at charts all the time, but I don't have to stare at my charts every day. I can walk away from the charts, get myself a cup of coffee, and not miss something. When I was trading 1 minute and 5 minute charts, I couldn't even walk away for a cup of coffee. So there you go. Any questions? Chris, did you see what you needed to see? I apologize. I thought that that this drew a little yellow circle around my cursor. That I could be mistaken about that. That may come from my other software tool. I'll figure out some way of making it a little more prominent for these webinars. I do know that I'll be switching shortly. Right now I'm using Google Hangouts to do these, and I'll be switching to OBS, and I think OBS will allow me to do some more things like make my cursor more prominent and that sort of thing. So, okay, let me see if you guys have any questions. Cyborg Ty, I'm glad I got that right. That's a great name anyway. Ozzy, how are you doing today? I believe I've seen you before. Let's see. Oh, watching on mobile. Yes, I get it. I get it. Tony, a Forex pair where a loss is taken. Well, I can look for one and see what we can see. I did set up this chart. This is a Euro USD daily chart, and I set this up so I could show you the indicator. Just go to indicators and scroll down to Bollinger Bands, and there it is right there. And this is what it looks like on TradingView. My ever-present volume and ATR are down here. You guys can see in my other videos how I use them. Let's see. Here's what could be a good example. And this one is a little past its prime right now, but this is a situation where you probably, I don't know, this is still active, I would say. Price hit the top Bollinger Band here, and we got a nice wide candle with a stop that closed down here at the very low and across the center band. So this would be a signal right here. Let me draw a line right there. That would be a signal right there. If I were trading this, this is a daily chart, I would look at the ATR for this particular day, which is 59 pips. So I would look for a 59 pip target, initial target, and I would do that like so. 59 pips is right here. That's 60 pips right there. When 112.25, so I would have gotten half my profit right here. I would have set the remainder at break even, which is right here. So I would have been taken out right there. And that's the way I would have traded this personally. So we would have gotten half off down here for 59, 60 pips, and the second half would be stopped out right here. However, if you were trading it according to the rules on the strategy, you would put your stop up here somewhere, and your target, well, it touched the center line here, didn't push very far above it, but that would have been a negative or a break even ish right there. So I probably wouldn't have closed that if it didn't close above the center. So I'd probably still be in this one short. And currently the trade would be up about 80 pips, 75 pips. No, a little less, 69 pips right there. Let's take another look here. Let me see if I can find something else. I would have taken this one probably. Touches the top of the Bollinger Band here and is has a nice wide candle. Closes near the bottom. It's not as low as I would like to see. Let me point this one out. Not as low as I would like to see, but it pushed way down here and then it closed here. And this, I believe, would be another break-even situation. If I, again, were trading it my way, the ATR is 66 right here. So I would be looking for 66 pip first target, which is right here-ish. So I would have hit my target on this candle right here, and the remainder would be riding at break even. So I probably would have gotten stopped out on the second half right here. Or if I had, this probably would have been a loser. If I had been trading with the other rules, because my stop would be up here, but I would have closed it and taken the loss here. Now, this is a situation that I was talking about earlier where if I had just followed the rules, it would have, well, the rules say to close it on a break above the center. So we would have been out even according to those rules. So I think this may be the example you're looking for. This would have been no better than break even, probably a little bit of a loss. Okay. Chris, yes, this is being recorded, and it will, it should be available almost immediately when we get done. Yes, the buy trade, I will look at that again. What you want to see is step one, price touches the bottom lower Bollinger Band right there. Then you want a big, wide candle that pushes up across the center Bollinger Band. and it's got to close near the top, and take your buy right there. And then you hold it until you get a touch of this center Bollinger Band right there. Well, actually, I guess it didn't touch this. The buy trade is still running, 500 plus pips profit and counting. So this is on a daily chart in August of, I don't know what year. This example comes from the Trading Strategy Guides blog, and I'll link this blog below so you can see it. I'm not sure when this was written, so it could be that it's a year or two old. So you could actually go back and find this in July of whatever year the blog was written, and see how far this trade actually went. Screenshot. Hey Ed, a screenshot of this, the Euro chart that I was just doing right there. Yeah, I'll go ahead and take a screenshot of it. And you can see it right there. I don't know for sure if that's going to let you look at it. And if it doesn't, let me know. And I will save this image and post it where you can actually get to it. So if somebody wouldn't mind trying that link that I just posted to see if that's a public link or not. And if it isn't, I will make one that is public. Let's see. Heikin-Ashi candlesticks. I use Heikin-Ashi as an exit indicator on one of my strategies, one of my algorithmic strategies. I'll talk about that one day. But I love Heikin-Ashi candles. They often give you a great early indication of a trend. So yeah, you can combine this with Heikin-Ashi if you want, and use two indicators. That will most likely give you a filter. If you use one as your primary and the other as a filter, that would be a great way to find good entries. Tony, this uses 20 period. We use the default settings, which is typically a 20 period and 2 standard deviations on the Bollinger Bands. Anybody get a chance to try that that screenshot link? GBP is like an ATM machine. Yeah. Yeah, Brexit's been good to us, hasn't it? Let's see. One example for buying. Okay, let's see. See if we can find one. Let's see. Well, here's a bad example for buying. But it's only in hindsight it's a bad example. If the charts were live and we couldn't see all of this over here, this would be a good trade signal maybe. But here it touches the bottom Bollinger Band, and then we get a nice wide candle that crosses the middle Bollinger Band and closes near the top. And I would buy it right there. Then it closes back across the line, so this would have been a loser. Let's see if we can find something else that's good. This is a good sell signal right here. Touches the top, and then we get a nice wide candle that closes near the bottom that breaks the center band, and it did really well. This is probably a good buy signal. This is not as wide a band as I would like to see, and it also doesn't close as close to the top as I would like, but I would still probably have taken this one. It would probably do you well to define exactly what a good strong candle is, and I would say that the ATR is will give you a good reference point for that. So right here on this candle, the ATR is 80. You see look over here at this number. When I have the cursor over that, you see the ATR is 80 pips, 81 pips. And this candle is 114 pips long. So I would say that if the candle is at least equal to the ATR or longer and closes in the top, say 15, 20% of the candle, I would call that a good candle signal. And of course it has to cross the center band. Oh, good, Ed. Thanks for checking that out. I've never actually done that. I use those screenshots all the time, but I've never actually given someone the link, the actual TradingView link, to see if it was a public link or not. So I would say this qualifies as a buy signal. And I would also say that there are no closes below the center band until right here. So that actually would have turned a little profit, 67 pip profit on that trade. It went 243. So you can modify these strategies too, but the key is testing it, back testing it, forward testing it. What we're doing right now is back testing. You see, we're finding situations where the strategy gives a signal, and then we're seeing exactly what the price did afterwards. So we can see that if we followed the rules of this strategy, our stop would be down here. So we would have been in this trade all the way up to here and all the way back down to here, and this would be our exit, according to the rules that are laid down in the strategy. Now, if we decided after we did some back testing that we might want to modify this trade a little bit, maybe we want to take profit when it first touches the opposite band here, like here. So if we did that, we would have about 148 pips on this trade. But we need to back test that to see if that works every time, because one example is just an anecdote, and anecdotes are not data. Okay? This is a great trade setup, but it's not always going to look like this. So just saying, well, it worked here, it's going to work elsewhere, doesn't tell the story at all. The only way you're going to know if this story is accurate or not is if you go back for 2 years and look at every possible signal that could have happened and determine if it worked overall. Because trading is not about something that worked one time. Trading is about making this work over and over and over. But it's not going to work 100% of the time. It's never going to work 100% of the time. And if a trader tells you he's got a strategy that works 100% of the time, then he's got a time machine, okay? Because that's the only way you can know something that's going to work every single time. What you're looking for is an edge, a probability edge in the market, a statistical edge in the market. And our edge is our rules. And then we follow the rules every single time exactly the same way. And we make profit. Okay. Yeah, I always love the Bollinger Bands. I have a couple of strategies that I've used that use the Bollinger Bands, and I like, I'm all about volatility. But you can see how tight it got right here, and you can see the volatility dropped off nicely on the ATR. So this is what I use now to look at volatility. But this right here gives you the same information. It just lays it right on top of the candles. So what's the lowest time frame or currency pair you've used this strategy on or suggest? Chris, that I've used Bollinger Bands on 5-minute charts. This particular strategy, I've never looked at on lower than 4-hour time frame. But that's because I look at almost no strategies on less than 4 hours because the amount of focus required to trade 5-minute charts is beyond my capability. In fact, hourly charts are, yeah, I can trade hourly charts for a little while, but even hourly charts are just not my thing. So I look primarily at daily charts. I like daily charts. Like I say, I can look at charts all day long, and I do look at charts all day long. I just don't stare at them all day long. I can get up and walk away. When I'm done with this webinar, I'll go to the gym, and that's okay because I'm not going to miss anything in the hour and a half I'm at the gym. I don't have to worry about what are the charts doing while I'm at the gym, That way I can do what I want. It gave me my life back when I quit looking at 5-minute charts and 1-hour charts and that kind of thing. So now the downside, of course, of trading daily charts is you have to use larger stops and smaller position sizes for that reason. But that's okay. It gave me my life back. I have a life again. Anybody else have any questions? Questions? Questions and answers. The Q&A slide. I should really have a better looking Q&A slide. I should also have music for Trading Maxim time. I keep talking about doing that, and I keep not doing it. So let's take a look at today's Trading Maxim. I love the Trading Maxims. According to the dictionary, a maxim is a general truth, fundamental principle, or a rule of conduct, or sometimes just a proverbial saying. Some of my maxims I use to keep me focused during my trading. Others are just motivational quotes that I find useful in general. And I use these maxims to help me not only in my trading, but in my life focus. Most of my maxims come from reading or are suggested to me by friends, coaches, teachers, or other acquaintances. I'll add a new maxim to my list whenever I find something that fits me. And once in a while, I write my own maxims. I hope they help you as much as they've helped me. I suggest that you start your own list. Feel free to borrow from my list anytime you want. Today, we're going to draw from the archives. Trading Maxim number 43. The only people who achieve much are those who want knowledge so badly that they seek it while the conditions are still unfavorable. Favorable conditions never come. C.S. Lewis is one of my favorite authors. I've read just about everything he's written as far as I know. So I love having a quote from him in my maxims. I've had this problem all my life. I always want things to be just right before I do something. And I fight with this every single day. I can't look at charts unless I'm sitting at my trading platform, or I can't work on my car until the conditions are just right. I have all my tools right there. It's not raining, or it's not too hot, or it's not too cool. I can't write an article unless I'm sitting at my desk. I can't make a phone call unless I'm sitting in it's just one thing after another. I can't do my workout until certain conditions are right. Blah, blah, blah. I fight this pattern every single day, you guys. Every time I decide to put something off until conditions are ideal, I just ask myself, why am I waiting? What am I waiting for? Most of the time, there's no reason at all not to do it just right now. So think about whether you're waiting for exactly the right conditions to start a new business or go back to school or whatever it is that you should be doing. The exact right conditions rarely occur. Just do it now. And I guess that's what I appreciate about Nike's just do it. Remember Bollinger Bands swing trading strategy steps. You wait for the price to touch the upper or lower Bollinger Band. You wait for the price to break below the center or above the center if you're going long. The breakout candle needs to be big, bold candle, and you need to define what big, bold candle means. And like I say, I use the ATR to make that decision, make that definition. Needs to close near the low of the range for a sell signal or near the high of the range for a buy signal. Place the protective stop above the breakout candle or below it for a buy signal. And then take profit once it breaks and closes back above the center Bollinger Band or below it on a buy signal. Okay. Anybody have any questions about that? Comments, questions about anything? Any trading questions or? If you don't have time to analyze charts or you just don't want to. You guys are like this. Trading Strategy Guides has the Strike Trader Elite Trade Signal service. You get Forex trade signals on a dozen or so pairs on different time frames, all based on the Strike Trader Elite system. Look below the video for a link to the free signals that you can check out on Telegraph app. And I'll post a link below that explains the Strike Trader Elite system. A screenshot of the steps. Absolutely. Let me give you a screenshot of the steps. I'll be posting this slideshow in the comments below, a link to the slideshow. So so you'll be able to download the PDF link. It may take me a couple hours to get that up there, but there's a screenshot for the rules. Any other questions? Oh, let's see. Simbenji, how are you today? Thanks for that Disney link. I mean, Disney for paying attention is what I'm trying to say. How much time do I spend every day scanning for a trade setup? It took almost half a day. It almost like a full-time job. Sometimes I feel like it is. I don't. Sometimes I just go all day and I can't find anything. But I think I did a video on I'll have to figure out where that is on the steps that I take. Usually what I do is I have a big watch list of things that I look for signals on. And I think I've shared this with you guys before. This is my red list. The red list has active trades up here at the top, and then these are things that I have potential trades on. And if you go back and look at videos, you'll see. Let me take this Bollinger Band indicator off of here. If you look at the prior videos, you'll see these setups. These are things that I'm looking for signals on. This is one I just did a video on. Cavco Industries. Euro yen was from a week or two ago. And so I have these that I keep an eye on for actual trades that take place, but these are something I've already done videos on. I have my green list, which are pairs that I think are active, that I'm looking for things on. And I find the green list by looking through those news things that I look at. So I get a news email called The Hustle, and another one called, I don't remember right now. But there are links below the video. You'll see links below this video that has that will take you to these places. Trading Casey has a website called financeandmarkets.com where they pump out all kinds of news, and I look for news. I look for stocks and commodities that are in the news. And then I also look at cryptos, because cryptos are a great source of potential signals. These are the cryptos that I'm looking at right now. Bitcoin, Litecoin, Ethereum, Ripple. This is the Litecoin Bitcoin cross. This is the EOS, the NEO. And I was really only looking at the NEO earlier because of its connection to the Chinese government. Bitcoin Cash, I don't even know why I'm still looking at this, because it doesn't seem to be doing anything. It's a nice 1, 2, 3 reversal that just triggered here. But I haven't ever taken any trades in Bitcoin Cash. And waves, I don't even know why I'm looking at waves either. But I just find some that I like and I look at them. And of course, I look at Forex pairs. I look at all the Forex pairs, daily charts for good signals. Unfortunately, the Forex pairs don't give me the really good consolidations that I like to see. I wish I could see more of those. I love big consolidations. And then I have this is my big watch list right here. And most of these are in the green or the red list. But these were all symbols that I've looked at. This is Nissan Motor Company. And I took this. I don't think I did a video on this. I took this trade. It closed back down here, so this was a loser for me. But Costco was in the news for a while. This is the dollar index. I like to look at the dollar index because it gives me an idea, what all the dollar pairs are doing and so on. So there are days when I spend half a day looking for something. There are other days where I find 5 things, or Simbenji people like you find things for me some days. Casey found me this great this CGC trade right here. He found this nice descending triangle on this, and this is looking pretty good. It's like it's getting back up to my up toward my stop, but hopefully it'll drop from here. But just keep looking, and you'll start developing an eye for it, and it'll make it a lot easier. Okay, Tony, you will do some back tests on the 4-hour, 8-hour, and daily charts. Oh, Australia. One of my Aussie friends. Very cool. Oh, I would be glad to share my journey as a trader. I've been doing it since '04. It took me a long time to get the hang of it. The emotions are the biggest thing. Got to get past that. And the easiest way to get past that for me was to make my trade size so small that it no longer mattered. And so I started trading Forex on Owanda, and I started trading. Owanda allows you to trade single units of currency. So, a micro lot is 1,000 units of currency. Owanda allows you to trade 1 unit of currency. So, a micro lot is typically somewhere around 10 cents a pip. So trade something that's like 1 cent a pip, so that if you lose a buck, it's like no big deal. And then just increase your size from there. That's the thing. That is the one thing that helped me with my emotions. And my trade maxims, especially the beginning, the early trade maxims. And I do need to publish those into an ebook because I know that would be helpful to everyone. The later trade maxims are more motivational life things. The early trade maxims are definitely about um, they're definitely about the uh, what to think about while you're trading. Um, this is I don't know, a post-it type application, and I have my trading maxims here in the order that I just wrote them. Okay, and would you rather be in a trade wishing you were out, or out of a trade wishing you were in? That was a huge one for me. I would get FOMO syndrome, the fear of missing out, and I would jump into everything that looked like it was vaguely sort of going in my direction. This helped me a lot with that. There will always be another trade. That helps me if I get out too early, or if I'm in too early, or in late, okay, or about to get in late. You know what I mean? Never bet the farm. That was a big one. No single trade should ever affect your lifestyle. So never bet so much that, if you're breathing hard and your mouth is dry and your hands are wet, your trade size is too big. Okay. Uh, this one was big for me. The never just a line, it's always a zone. You'll hear me say that one a lot, and so on. So these were all really helpful to me in my trading journey. So, and I picked those up over years. So, and I'll, you know, I don't want to sound like I'm, doing a sales pitch on you here, because I'm not. I've been with Casey since 2009. I met Casey in 2009, and he, among anyone, is solely responsible for turning my trading around. He is now my trading coach and has been for several years. He's also, he's the owner of Trading Strategy Guides and all these other, a lot of these other trading websites. Um, he's helped me more than any single person in this, and that's the reason why I want to be able to give back to him and his people too. So those are some of the things that have really helped me. So I'll go through this longer. Maybe this is our subject for next Wednesday. Trading psychology is a huge thing. Oh, and that's the other huge thing, was a book. Oh, can't believe I can't think of the name of this book right now, because it's a book I talk about all the time. Um, I apologize, guys. I can't think of the name of it right now, but I will post it below here. It's available on Amazon. It's a trading psychology book, and it's all about trading psychology. And it's huge, and it was the other turning point for me. Trading in the Zone. Thank you very much, Johan. Trading in the Zone. This book was monumental for me. Okay. I read this. I've got it on my Kindle, and I read this thing a couple times a year. Trading in the Zone is not about strategies. It's not about anything except trading psychology. It was a complete turnaround for me. So that's the other thing. Mark Douglas. Thanks, Gregory. Mark Douglas, Trading in the Zone. I can't believe I couldn't think of that right at that moment. I guess it's time to read it again, isn't it? Anybody else have any questions? Comments? Opposing viewpoints? I'm not afraid of opposing viewpoints, guys. Trading is very personal, and everybody will say that to you, and it sounds like a cop out. It sounds like somebody is just trying to blow your question off or whatever. But trading is very personal, so you've got to do what works for you. Because if I tried to do what my friend did, I did try to do what my friend did with the 1 minute, 2 minute, 5 minute charts, and I lost money. He was making money hand over fist, and I was losing money hand over fist, and that was just not working. And it was because I was missing things. So do what works for you. And let's do this again next week. I'll be here. The plan is on Wednesday mornings at 9 a.m. U.S. Eastern Time for these webinars. And watch my analysis videos on Monday and Friday. And thanks for watching, and thanks for subscribing, guys. And if this webinar helped you, please hit the thumbs up below. Have a great remainder of your week. And I will see you next time. I'm probably not on Discord as much as I should be, Gregory, but I'm still there. So if you address something directly to me, I will get it eventually. I'm also on Twitter, and you can find my Twitter link below. It's not there yet, but it will be in a couple hours. So if you guys want to contact me or just leave a comment on the video, I try to get to the comments every day or two. Any other questions? All right. See you, Ozzy. See all you guys. You're welcome, Ed. You guys have a great day.